Hey everybody, welcome to the webinar. Thanks Dave for having me. I've got a bunch of stuff. There's not much marketing in this. There is a lot of numbers. I think there might be 4, 5, 6 things you can take with you to actually change your investing slash trading life. But we're eventually going to get to creating a portfolio with just one indicator that I'm finding to be a really powerful indicator. But it's going to be a ton of numbers here. They're all hypothetical, meant to give you an idea, not meant to give you actual trading results. Past performance is not. Make sure that you have future performance, right? Past performance does not guarantee anything. All right, moving on. We've got a ton, so let's get to it. First of all, right off the top, there are millions of people out there who think that a trading festival is a waste of time, right? They're just laughing at us. Oh, look at all the people trying to get an edge that doesn't exist. Okay. And here's tip number one. Are you ready? There's only one money-making script in the entire world. Okay. And here it is in italics. It's save your money, 10% a month, 20, whatever. Spend less than you earn, so don't spend your whole paycheck. And then the crucial part, have our money make money. If you do those three things, you understand this is the advice of hundreds of self-help books. The most famous self-help people in the world will tell you this exact script. But we have to have our money make money. All right, so here's tip number one. If your goal is to make money, this is what the experts say, then buy an index fund. All right, that's number one. That's easy. If you're an academic or if you're a zealot based on information that was out decades ago, that's the only way. And to prove it's the only way, here's a very famous quote from a very famous trader, right? And this is from one of the top self-help investing books, retire early investing books out there. Here's a quote. Now in his 80s, Jack Bogle, this is what Jack Bogle said about besting the market. I've been in this business 61 years and I can't do it. But this is my favorite part. I've never met anyone who can do it, and I've never met anyone who's met anyone who can do it. And as the author then chimes right in, neither have I. See what I'm saying? These people are laughing at us. These experts, these people who are responsible. Okay? But believe them or believe an anonymous person on the internet, but that's the method. And the preferred method, if you want to take it with you, is VTSAX, VTSAX. Look it up. Just hold it, buy it and hold it and stop all this trading nonsense. Your life just changed forever. Save your money and do that. All right. And here's what you get, Johnny. Let's let them know. This is from 2003 to 2021. You can see there the total S&P return is 281%. I mean, that's great, right? That's 7.9% a year. Now, that doesn't include dividends, and you always have to include dividends, right? Not really, but okay. So that would be 10% a year. I mean, that's why they say it, right? That's why they're laughing at us. And this is a different way, if that's too complicated, to look up VTSAX. Here's just buying the SPY ETF and holding it from 2003 to 2021 on a $10,000 hypothetical, right? It's all hypothetical account. Well, you would have had $30,354 of profit. A drawdown seems a little steep, but hey, that's the way it goes. It's the only way to trade. This is what real life would have been, according to that. We would have bought it way back in 2003. That would have been awesome. And then this was our entry back in 2003. And in 2009, we would have been down, we would have seen anyway, a 57% drop. Okay, that's rough. And you can see that after all this time, from 2003 to 2009, we'd be down 57%. 6 years of doing what the experts say, and you're down 30%. Of course, it recovered, which is why it's the only way to do it. Okay, so buy an index fund, get your 7 to 10%. You will possibly have 6 years of no profit and a 57% drawdown, but the experts don't care, so I guess we shouldn't either. It's a 300% return overall on the SPY. You saw that the dividends did a little better, right? And then I even dug up an even better tip for you tonight. You ready? You could just buy and hold SGRNX. Look it up on Morningstar, whatever. It beats the market. It's done slightly better than the market over 15 years. So there's tip number two, okay? millions of books. The smartest savers and retire early people will tell you exactly what I just told you. I just saved you a bunch of reading, okay? Now, if you don't buy it, let's get into why we're here tonight, right? Well, I mean, buy it or don't buy it, that's what it did. If you think you can do better, then here's my tip for you. Are you ready? If you don't know what to do, if you don't want to buy index funds, in other words, and you want something that will make money, I've been trading since 2004, been making automated strategies since 2012, been testing for thousands and thousands of hours. Here's what I've come up with after all this time. Trade breakouts. Don't necessarily buy the VITSACs, trade breakouts. Oh, well, that's great. What does that mean? Well, how are we supposed to trade breakouts, you say? Well, tonight, with the reason we're here, we're going to talk about trading breakouts with Bollinger Bands. Now, I think John Bollinger doesn't like us talking about something he created, so there's a little trademark on there. It's not my trademark. That's John Bollinger's trademark. Or is it Bollinger? I think I pronounced that wrong. It's not complicated, all right? And this is possible system or tip number 3. Trading breakouts isn't complicated. There isn't a lot I need to teach you tonight. I've got a lot of numbers to show, but I don't have any tricky entries. I don't have any level 2 quotes. I don't have anything complicated to show you, except if you want to make money, maybe you should buy breakouts, okay? Here is a system. BB breakout, that's Bollinger Band trademark, on Apple. Now, of course, that's cherry picked. I guess it was the first chart I looked up and put it on the screen. If you're going to trade breakout, it would be helpful if you found an instrument that actually breaks out, but beside the point, it's the first one I picked, honestly. Here's the system. Now, this is a Bollinger Band, right? This is a measure of an instrument's volatility. Most of the time, using really important math, price should be in between the Bollinger Bands trademark, right? It's because this is a deviation. It's a standard deviation. If price does something out of the normal, if it's a deviant, then it will go outside the bands. All right. Here's the system. Super complicated, and I'm sorry if you can't see it. When price closes outside the Bollinger Bands, you go long at the open of the next bar. It's complicated, I know. If price closes outside the Bollinger Bands, go long at the open of the next bar. Now you can see on this particular one, I know it's small, price closed outside the bands and then gap down into the bands. So you can say, well, is that a trade? What I'm saying is it's not a big deal. We got the breakout. It's fine to just buy it here, right? This is an automated strategy, of course. It did, and was it a good trade? Yes. Look at that, by the way. We got here down at 70, and this was 2020. Anything going on in 2020? I think something might have been going on around April 2020. But anyway, it went from 70-ish up to almost 140. That's a decent little trade in a few months. All right, well then what's the exit? Great, we got the breakout. How do we get out? Now this is super complicated. You might want to write this down. You just simply get out when price closes below the other lower Bollinger Band. Ooh, that's deep, right? So price came down here, didn't quite close outside of the bands, so we're still in. And then it finally closed. That is a pretty nice trade. It's not as full as it could have been, but that's a pretty nice trade. Here's another trade. Closed outside the band, open at the next bar we're in. This one didn't go so well. It turned. Now we're into 2021 in March, and it closed outside. That's basically a break-even trade, okay? Something that simple. Does that really work? Well, here are the rules. Just use your default settings for the Bollinger Band. You know what those are? Trademark 20 and 2 and 2, 2 and -2. 20 length, 2 up, and -2 down. That's the standard. Every platform has it. And that's what you just saw on that slide. Go long in the breakout above, exit when price goes below. It would have doubled a $10,000 account since 2019. Very recent, I know. If you just traded $10,000 of hypothetical stock each time. Here are some annual returns. Well, that was a decent year. 2020, the pandemic hit, and this strategy would have made a hypothetical $6,500, or roughly 65% on a $10,000 account. Right? Did all right in 2019, and did okay there. This is not quite. It's a little misleading because it was way up in January, and then it closed out for just a minor break even. So it didn't really lose money. It just your winning trade went down. So anyway, that's how TradeStation does it. But that simple breakout Bollinger Band trademark strategy doubles an account. I told you it was easy. Now let's get more complicated using a leveraged instrument. I make a bunch of automated strategies for Forex. That's what I trade my own money with. So now we're going to get a little tiny bit more complicated, and this is another thing hopefully you can take with you if interested. All right. However, I really don't need to spend that much time teaching you this strategy because it's super duper easy. Couple of changes. We're doing breakouts on the GPB, JPY, the pound yen. These are some trades from 2020. And the system goes as follows. We're waiting for a close outside of the bands. Get in at the open of the next bar. Pretty easy. This one didn't really go anywhere. It spiked up and came down and stopped off at break even. This one does have a break even. Don't have to have a break even, but this one does. But look what happened. It's outside of the bands, right? So because it's an automated strategy, or you could sit on your computer and just trade it, press the button. Because it's an automated strategy, even though it stopped out at break even, we're right back in on the next bar because it closed outside of the bands, right? All of this was outside the bands. And then it had a really, really nice win. Trade breakouts, right? Now, you could do better if you want because you're smarter, right? Look at what happens next. It's still above the bands. It would be hard, I imagine, right, as a trader to have this massive win. And if you're leveraged, that could be, that could be thousands and thousands of dollars, hypothetical, of course. And then get right back in only to get a quick stop out. Yikes. But automated strategies like, just go, man. Just go. Just do your trading. Stopped out. And it stinks about this. Oh, I would probably get emails from this. I probably still will. Look at that. If I had just changed my stop loss, I wouldn't have even been stopped out. I might have gotten another win, but I did. But it's still above the band, so we're in at the open of the next bar, and ooh, break even. That's a heartbreak. I never said trading breakouts was easy. I just told you it made money. Okay? And then we're in again and another loser. The trials and tribulations of being a trend following trader trading breakouts. And if you'd like a short example, again from 2020, price closed below, we're in at the open of the next bar, did great, didn't do great, oh, and we're out of break even, okay? And so on and so forth. Not really much different than the Apple chart, but this has a break even and it's also on a 4-hour chart, okay? Okay with that? Again, not too complicated. This is a boring slide, but this is what the bands mean. 95% of the time, if you set your bands to 2 up and -2 down, like I said with Apple, price allegedly is going to be within it 95% of the time. So the question is, traders, we got to make a system. This is boring, 95. It's always there. What happens when it's here at 5? What are we going to do? Well, in my life, I traded back to the mean. Outside the band is bad. It's going to come back in. And I've made systems that trade back to the middle or trade back to the lower band. They don't work as well as breakouts, according to the math. Is that crazy? Does that make your mind question? I'm just telling you. So instead, I'm going to go with it. Okay? So we're not trading. See how this does revert to the mean a little bit, but then it goes on, right? And then it closes above. It's the same slide. Nothing new there. You can see this didn't revert to the mean, right? And that's what we're going for. This didn't really revert to the mean, although it kind of did. This definitely did. Okay. Keep in mind, if you're trading breakouts, it's not going to break out every single time. We'll get to that, okay? Now, if I go back for a second, this is Bollinger Band. I'll give you all the settings. These bands are set to only one standard deviation, okay? Which means that only 65% of the time is it going to be within that bands. But won't revert to the mean? Yes, of course. We've already talked about that. And we've already kind of talked about, because this one trades more, we're going to get more trades. But guess what that means? We're also going to get more bad trades, right? Because it might revert to the mean. You can make systems like that. This is not what we're talking about tonight, because I think this makes more money, okay? But just keep in mind that, especially if you lower the deviations, like I'm going to do in the system I'm going to show you here in a second, if you cut it down to one, you're going to get many more times where it's quote unquote extreme, right? 65% of the time will be normal and the rest will be extreme. And we're going to try to take trades in that extreme. We've also got a different example for our bands coming up soon also, okay? Enough, let's see what it means in a system. All right, I kind of stole this system from a really nice book by Brett Penfold. Look up his name on Amazon. He's a very passionate guy, writes some good books, so read it. But I took this from the book. I didn't take the rules from the book, I took the idea from the book, right? But this system actually, he took it he didn't make it either. This system's been around, all right? Trade breakouts with a band of 80 length. I did no optimizing there. I just took an idea, okay? Sounds so mean, took. 80 length and one standard deviation. That's why I showed you that example. This is an actual old timer system. It's not new. Might be kind of new to do it on a 4-hour chart. Maybe you want to do it on daily if you're using a different instrument, but I use 4-hour for Forex, okay? I put a target on it, so that might be something unique to me. 450 pips for your long trades, 425 pips for your short trades. Some people think that's blasphemous. I'm just telling you what I think, okay? The stop loss is only 120 pips. You saw that on the screen. So we've got 450 up and 120 down. That's pretty good risk to reward. A lot of famous people talk about risk to reward. Well, this one does that. It's trading breakouts and it's going for a big risk to reward, right? Is it going to have a high winning percentage? Raise your hand. Don't raise your hand. No. The answer is no. I did put a break even. Does break even help? The answer is sometimes, question mark. It does. In this particular system, I liked it, but in many systems, trading breakouts, you don't even need it. So that's something that maybe you could throw out, but I'm just telling you everything that went into this one. And I like trades. I don't like the Forex market. I don't like it that much after 12 p.m. Eastern. Now, that being said, do I have systems that trade after 12 p.m.? Yes, I do. But for this particular one, I did not even bother with anything after 12. I figure I'm going to let the London traders do something. I'm going to let New York traders do something, and I don't care about the other traders. I want my breakouts in that time period. This one had a time exit of 35 days. It's a long time. If you haven't done something by 35 days, maybe it's time to just call it a day. So I put that in. It's not an integral part of the system. You can take it out. Here is, sorry but for the small numbers, here's a performance report. Pound yen 2003 to 2021. I traded one hypothetical lot on a hypothetical $30,000 account. Okay, $194,000. Drawdown in dollars is 24,000. Profit factor, I like over 1.3. I don't know what you like. The drawdown percentage is crucial because this looks like, well, that's 24 out of 30. That doesn't seem right, but here's how it calculates it. The maximum drawdown does not happen the moment you turn on the robot. In this particular case, it didn't. It almost never will, right? I mean, it will sometimes, but it's rare that the worst drawdown is going to happen at exactly the moment you start, right? The trading world doesn't know when you start, so it's highly unlikely. But anyway, when this drawdown of $24,000 happened, it was a 32% drop from the high. That's how it gets that, okay? Remember, when it happened in the index fund, the SPY, I mean, it was 57% from the high, right? Not 57% from the open, okay? Absolute drawdown is important. $6,700, that was what it went below our original hypothetical account, which is about 22%, right? 30K account, it went down that much, okay? That's all calculated for me. I did not do that math. Took 1,300 trades though. That's a pretty big sample size. And look at this. Profitable trades are 13%. Now that's not entirely accurate. I mean, it is accurate, but this particular software counts a break-even trade as a losing trade. Like, I don't think that's fair. Other software counts break-even as just nothing, and this percentage will be higher. So your actual sadness is not as high as what, 87%? Okay, that's not exactly true. Break-evens, remember, are not counted, and there were 686 of them. So keep that in mind, right? But I told you it was a low winning percentage. Okay, so that was profit divided by my original hypothetical. That was 6.46x, right? So, well, about 600% ish. Remember, we were at 3x or 300% on the SPY, right? So this silly little idea that I coded up was more than double. Okay, less drawdown. And after 2004, it never came near the original account size. Remember, at 6 years in on the SPY, we had a terrible drawdown. 6 years with no money. After 2004, as you can see here, we had a little drop at the beginning of this particular hypothetical test. But then if this is our account, right, obviously it never came back. So that simple system with that lousy winning percentage and all those weird settings, that's what it did. Now look, is it perfect? Surely it's not, right? Drawdown, sideways, drawdown. Ooh, but when it goes, it goes, right? Look at that. Okay. I said I'd create a portfolio. I mean, that one chart beat the market, hypothetically, right? So maybe that could just be your portfolio. But no, let's do more, shall we? We're going to trade breakouts. This time, we're going to mess with the bands in a different way. We're going to trade breakouts from a 1 hour chart. Now, that's controversial because generally speaking, breakouts from a bigger chart, daily, weekly, 4 hour, usually those breakouts have a little bit more punch behind them, right? A 1 hour breakout, is that really a breakout? Is this kind of feeble, right? It could just be noise. But here's the antidote for that. We're going to lengthen out the bands to 100. Okay, so now it's looking back 100 bars, right? And checking the deviation from 100 bars. And look what we did here. We upped it to 3. Okay, so now we're over 95%. Almost the entire trading history of an instrument will be inside the bands if you make it close above 3. Are you going to get more trades or less trades? You know where we're going, right? Many, many, many less trades. But the idea is that this is so outrageous. It almost never happens that even though we're on the 1 hour chart, we're making it prove that something really, really crazy is going on. And it's just another way you can mess around with volatility bands like Bollinger Bands trademark, right? But this is just a different way to do it. And we're going to put these all together, of course. Different settings, if you care, if you're interested. 275 pips for your long trades, 350 for short. Can you make them the same? Sure you can. I didn't for this. I think that the long side of the market and the short side of the market are completely opposite, totally different things. So I'm fine with them being different. You don't have to make them different. Uh-oh, big stop loss here. We're almost 1-to-1 or a little bit over. Pretty skeptical about that. I don't know about that one. And the break even is set to 60. That's pretty, well, I mean, 60 is sizable, but on the pound yen, I mean, you're probably going to break even a lot. That's my guess. Because it's a 1 hour chart, listen, if it hasn't done something in 5 days or 12 days, you can get out. Again, that's totally up to you. I get bored. I really want this trade to do something. And if it hasn't done something right away, I mean, we're trading breakouts, right? Do something. If it doesn't do something, then I just, bye-bye. I don't care. I just get out. Again, that's totally up to you. How did this one do? Okay, we're on the 1 hour, 2003 to 2021. Did my apostrophe out? No zeros there. I don't like zeros on my charts. One lot. Now a hypothetical 30K account. Here's how we did over that time period. 117,000, drawdown smaller, right? Which took our profit factor up higher. The drawdown when it happened was a 21% drop, again, comparing to 57 from the academic zealots, right? Look at this. Now, again, it's arbitrary when I started. I started mid-year 2003. I mean, that's a lot of years, but it's arbitrary. I could have started any time. But the absolute drawdown was tiny on a hypothetical $30,000 account, right? And it's only a very small percentage. Clearly, the trades will drop. We knew that going in. Our profitable trades did better, though, right? I mean, I guess that's understandable. We waited for extreme conditions, and we had a lot of break-evens, too, for the amount of trades that we have, right? A lot of break-evens, okay? But does that look decent to you? I mean, to me, it's a nice amount of profit to validate our idea that when it gets outside the volatility bands, we should go with it, right? Oh, but that's not all. It sounds like marketing. Let's now trade breakouts and do it even differently. So many things we can do. We're going to trade breakouts from a 4-hour chart again, okay, but we're going back. We're going back to near the default level. Instead of doing the book or the idea from the book, we're going to use 20 as our length. Remember, that's standard. That comes on everything. But we're going to bump it up a little, right? And I like messing around with the static numbers. I like to go a little bit above and a little bit below. For example, I like 1.7 or 2.3. I like doing that. The reason why, I mean, the math backs me up. When you see enough of these charts, you kind of get a feel for what you like. 2 is fine. It produces profit. But for this one, I wanted just a little less trade amount, and I like 2.3. So sue me. All right? Don't sue me. It's a joke. It's a joke. Target is similar to what we had before, 425 pips for longs, 325 pips for shorts. Again, you can even those up if that makes you a little bit queasy. The stop loss is back to being way, way less than our profit target, right? So now we're back to a better risk to reward. That makes me feel a lot better. And we do have our break even. We're set it to 70. You know, somewhere in that 70 to 100 range seems decent, at least to my eyeballs. What do we get? Well, similar, right? We upgraded the volatility on the bands. We made it a little bit harder to get out of the bands, right? Because we went to 2.3, but we still make a nice amount of profit. Profit factor is still pretty good. The drawdown when it happened was about 24%. Absolute drawdown, not terrible. I mean, not terrible, right? Few more trades, but because we made the Bollinger Bands trade market up, then we get less trades, right? Again, profitable trades. I know traders do not want to see this, and I hate to break it to you, but low winning percentages are not a bad thing. We'll talk about that. Winning trades, losing trades, and so forth, okay? And here is an example. We haven't seen a chart for a while, so I thought I'd throw this in. There's your 4-hour, 2.3 bands, closes outside, and then there it goes. This happened in 2021. See, that's 2021 there. So this just happened hypothetically, and that was a nice win. And here was a nice little break even. So that was just an example from our very last system, the 4-hour with the 2.3. You can see it did revert to the mean, but didn't hit our stop, and then it went. Okay. Well, we said on the slide we're going to put together a portfolio. Let's kind of do that. All right. We're going to keep it simple. Remember, one chart is enough. I mean, if you buy the VitSax and you just hold that, what portfolio is that? It's just one thing, right? So nothing wrong with just doing one thing if you wanted to. You have my permission. But a good strategy might be to mix some different Bollinger Band lengths and different time frames and keep it on the same instrument, right? Even though it's the same instrument on all, they're different. Well, so far we have 4-hour, 1-hour, and 4-hour, right? We have the 80 and then we have the 2.3. Completely different entry, right? Because the bands are all different. Now, I'm just going to add a mysterious 15-minute chart. I have a brand new robot, comes out probably next week. It's how I made all these charts for you. And I took a long time testing, and it's something that I will be trading with my own money most likely. But it was a good one. I'm not gonna lie, the numbers look good. So I added a 15 minutes, so now we have 4, right? I'm not getting into that tonight. We've already talked about all these. So if you put these four together, that's what they call a teaser. If you put those four together, then voila. On a hypothetical 70K account, 678,000. That's good, right? There's your drawdown. There's only 28% drawdown as opposed to 57. Absolute drawdown, I mean, not great. Profitable trades, again, break even. A lot of break evens in there, 1,500 break evens. That is better than 300%, right? Like triple better-ish. Max drawdown, half. Triple the hypothetical money with half the hypothetical drawdown. Absolute drawdown, remember 30% on the SPY hypothetical drawdown. Well, that's not hypothetical, it did, right, from the chart. But this one, so 3 times the money for less drawdown any way you look at it, and never underwater after 2004. Remember that quote? I've never met anyone who's met anyone who can beat the market, neither have I. Wait a second. What's that? Well, I guess I'm just making up numbers because that's the truth, right? Anyway, quick summary. Over 8, I mean, it's like 900%, right? I just wanted to lowball it, right? And whatever. So I think it's better. Now, here's the problem, right? This magical portfolio doesn't win all the time. Guess what? Nothing does, especially the good stuff. The good stuff loses sometimes. That means you haven't curve fitted. That means you have a real strategy. If you're looking for something that never loses, watch Roger Federer, right? Don't trade breakouts. We have a losing year in 2006. Now it's tiny, right? Not that much. And if you traded a hypothetical $70,000 account, look at 2008. Hypothetically, I mean, you're over $100,000 in 1 year. Another big year, pretty big year. 2020 did okay, and it's up hypothetically so far, okay? There are losing years, okay? I'm not going to show you something that's perfect or all doctored up. You're going to lose sometimes. It happens. Guess what? Index funds lose, and they never give you that big return. I'd love a portfolio hypothetically that has maybe a losing year, but gives me massive years, okay? It's just one, if one losing year sends you out of the game, then guess what? It's a very difficult truth. If you're looking for something perfect all the time, you might be very, very disappointed. Here's what I've found after all these years. It's the losing that makes the system successful. Sounds contradictory, but it's not. Okay, well, I showed you 3 systems. What if I didn't put that mysterious 15-minute in there? What happens then, right? This is something that you actually have all the settings for. Well, here you go. Less, right? I mean, that was a good system I plugged in there secretly. But those 3 that we talked about and gave all the details on, 430,000, drawdown is still only 30. It's still doing better than that magical index fund, right? It's still doing a lot better, about double, right? I mean, it's a lot more than the index fund, put it that way, with a lot less drawdown and never underwater. Here's what it looks like overall. Well, yeah, it didn't. The 15-minute helped. The 15-minute helped here, which means what? You maybe need to diversify. It helped here, but I mean, these are barely losing years, right? Again, if you're the type of trader that can't take it, this losing year, then you're never going to get this. If you're the type of trader who can't take this, you're never going to get boom, 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 boom. Right? Look at that 4 years. What happens to your financial life? I'm a terrible trader. I need to buy a new system, whatever. I mean, look at this. Look at this run, or even this run, right? This run can make a big difference in your life. 2020, didn't like 2020, but then it roared right back. See that? The losing, what happens after the losing? That means the system is probably not perfect. It means a system that's probably going to do okay in the future. Okay, now, I think it's fun, okay? I believe in audacious goals. I believe in having strong beliefs. I believe in preposterous things. I've seen preposterous success stories with my own eyes, okay? So again, I'm not selling you anything. So can we just talk about this for a second? The last portfolio of just 3 made that a nice amount of money, right? It beat the market easily, quite a bit. I didn't compound. I used the same trade size 17 years later. It doesn't make sense, right? Why wouldn't we compound our gains? So this calculation is if our account went up, our trade size went up also. If our account went down, the trade size went down. My software does it for me. This is what happened to that $70,000 account. 16,979,000. Profit factor still calm. Drawdown still less. Crazy, right? Now the drawdown in numbers is $5 million. Who could trade and lose $5 million? But guess what your account was at when that happened? I mean, it was way up there, right? It was way up there when you lost it. So hopefully you would have hypothetically gotten used to it. Absolute drawdown on our hypothetical 70K account, not bad, right? Only about 20%, right? Tons of trades, not very many profitable. Of course, we have the break evens. The 70K turns into 16 million. That's like 20,000%, 300%, right? Again, that's outrageous. With less drawdown, less absolute drawdown. I mean, is there anybody who could actually trade? I mean, people can trade GameStop and make this big money. Can we trade a real system, right? Or at least a system that's based on principles and not Reddit threads, okay? I mean, I'll show this. Does it work on a bunch of pairs? I don't care. I like to find something that moves and trade that. You could get emotional about the settings and just make those the same. I said that. Again, it's the same pair, so there would be some complication. I know you'd have to open up a couple different accounts. Yeah, it's tough. It's tough calling Vanguard and getting an index fund being on hold for 15 minutes too. I mean, it's tough, right? But it's also easy to set up. If you know the platform MT4, it's actually quite easy, right? Seems tough, actually quite easy. You could optimize, you could use different time frames, you could move to other pairs, you could not use break even, you could use a different indicator. I'm falling in love with this indicator, but you could use a different one. My robot that I told you about does 3 different entries, so use one of those other ones, right? Now, this was the tentative standings from last year. I just showed you this. I ended up finishing second place, 78%. That was a breakout strategy. Not this one, because this one's new, but breakouts on different things seem to work, okay? That's the takeaway. I gave you a bunch of things. You could go the academic route. I gave you 2. I gave you an index fund and a mutual fund. We also did Apple. We also did 3 other systems that you could trade in Forex. I mean, breakouts make money, right? Don't worry about earnings. Pandemic mostly does okay. Every big move in history is captured by a breakout. It's not perfect, but it will get you in. And a volatility indicator is a great way to do that, right? That's that new master trend robot, and there's my information. And Dave, that's all I got for you.